Hey traders, what's going on? Jamie Saettele here. It is April 30th, 2021, and welcome to the FX Power Hour. But we're going to be talking about more than just FX. We're going to get into some commodities as well. And why not even take a look at some indices? All right, so let me share the screen here first. And then we should be good to go. All right, so as I often like to do, I will start just a broad overview of FX, notably the US dollar. So, frankly, it was the last, I'd say 3-4 weeks have been kind of a slow drip lower in the dollar, really until today, until Friday. And we had a big reversal in the buck at a great level. And if you've watched any of these webinars over the last several weeks, you'll notice there's some terms that I use. And one of those is what I call daily or weekly reversal resistance and supports. This is not, your typical technical fib retracement or moving average. It's a little more of what I call kind of a hidden type of support resistance level. And what it is you look at the reversal bar. Okay, so in this case, the reversal bar is this weekly bar here in February, and take the close of that bar, okay, and place a line on it. So it's right there. You can see it's 11,714. It's even better when it happens like it did this week, where it lines up with a fib. In this case, the 618 retrace of the rally from that February low is indeed 11,705. So we had a huge level that we were coming into on Friday, yesterday, late Thursday, early Friday, and we nailed it and reversed sharply off of it. So what that does for me is it kind of keeps, stand back and take a bigger picture view. It keeps the, basing possibility, if you will, in place for the US dollar. That's been going on really since 2021 started, right? Remember, from a sentiment standpoint, we came into 2021, and I mean, the world was extremely bearish, the dollar, right? Huge consensus view, and really we've rallied throughout the year, even with the last 3 or so weeks of declines, and it's still that sentiment's still there, that broad-based consensus view of a weak dollar. So from a contrarian standpoint, I like that. From a chart standpoint, I like the dollar higher here. As I say, support is support until broken. And if you just look at this thick magenta line here, we have indeed been, trading off of bigger support. Okay. All right. So that is US dollar. And again, this is the Dow Jones FXCM dollar index, not the DXY index that most people are accustomed to. If we do take a look at DXY, bigger picture here, weekly chart, right? We've got, might as well go to the daily. Right, we do have that 5-wave decline, that lasted essentially a year from March 2020 until January, so say 10 months. And from then on, we've had, that gets a little tricky at this point. Corrections can take many forms, right? You've got an Elliott, you've got your zigzags, your flats, your triangles. And, from this low in January, we had what I would call a 3 waves up, right? 3 waves up, down, 3 waves up. So some sort of a complex advance there. From here, this drop, frankly, I would lean towards just calling it an impulse, but, it could be some sort of a double zigzag drop. Let's not get too worried about that. For now, I'm just focused on the levels. And I'll zoom into a shorter term chart here. You can see that we are right now here late in the week's just about over. We are testing very short-term trendline resistance. So as we head into next week, simply keep in mind, say 91.60, maybe 92.30 is levels for DXY, where you might pull back some. But really, as you go into next week, I think with today's reversal, you kind of have to favor early week, next week, early week strength in the dollar, okay, as we've been breaking above, again, the short-term resistance line in DXY. All right, so let's go to Euro. It's always a good segue. And here's a daily chart. So again, we had that three-wave drop in DXY as we had the three-wave rally, or sorry, three-wave drop in euros. We had that big three-wave rally in DXY. Really since April 23rd, so last Friday, we've been testing, kind of pressing against the 618 retrace of this decline, right? Now, traded off of it, went through it on Wednesday, put in that little, reversal candle yesterday, and today it's been straight downhill. So, from that standpoint, 618 retrace, good place to come off of. I'm going to look at Euro Yen later, which I actually think is a better idea. And I do think there are better ways to play the dollar here. However, as I go into next week, I'm going to be looking at 119.50. All right, that is the 38.2, okay, of this decline. It's also the low here from February. And if we throw on some averages, we got the 20-day and the 50-day right there. All right, so as I go into next week, 1950 is where I'm looking at Euro. I should say where my interest is in Euro, and I actually do have a little bit of a short on right now in Euro. So if we get down there and bounce, I will be looking probably to get out. But again, that's very short-term tactical comment there. And again, if we do drop, a bit, you can envision kind of thinking ahead. 1, 2, going Elliott now, a little bounce in 4, maybe 5, and that would get us down to that 38.2. It would be a natural place for a bounce anyway. But just, look at the chart. Look, you got the fib on here, and this is, where I like to look at fibs. Fibs aren't, some thing that, have to be respected all the time. I find the most useful when they line up with natural market levels anyway. And in this case, that's, definitely the case, right? You've got that low here, resistance here, support here. So clearly there is a vested interest at 119.50 in euro dollar. Okay. Cable, not going to spend too much time here because frankly, it's been, kind of nondescript to me. I will note, however, that you can see this. I'm going to zoom out a bit, and it might look a little messy here, just because I've got this shorter term fork on here. But if I scroll out, and you can see the 2007-2014 trend line, right? So now if we zoom back in to a 4-hour chart, you can see that over the last couple of weeks, including this week, that line has actually provided resistance, okay? And this is a good time to actually bring up a question that was asked, I believe, on my TradingView stream, which is, differences in log scale and arithmetic scale, right? So basically FX, for the most part, if you're looking at any sort of intraday chart, even say action over the last week or so, maybe even the last, couple of months, it's probably not going to matter a whole lot because the percentage moves are going to be rather small compared to, say, equities or even some commodities. However, when you're looking at a very long-term chart, in this case, we're looking at, cable back to 2007 high. So you're looking at, 210 down to 130, or sorry, 115 or so. That is a big move, right? So I just, as a default, I tend to look at log scale, but I will, toggle back and forth. So when you're looking at log scale, you're looking at percentage moves, right? So you're comparing apples to apples in terms of percentage moves when the market's, going from 1 to 1.05, or, going from 210 to, 220 or something. The percentage moves the same. So if I were to put up, say, arithmetic scale, you can see that it's just in, you know, the y-axis, I should say, is simply evenly spread out, right? Because each move, whether it's 170 to 180 or 180 to 190, it's all going to be the same. So in, you know, simple terms, it's, you know, it's percentage change for log scale, and arithmetic scale is just the change in the number, right? Not percentage. So I tend to look at log scale so I can compare, you know, the moves are similar whether you're looking at, you know, higher numbers or lower numbers. All right, so here is that British pound chart. As I go into next week, the level that I'm interested in is this lower. This is a pitchfork. It's what we call a shift fork. I'm looking at the lower level, which is going to be about 136. That's really all that I care about when it comes to cable. You know, you can see not as, you know, clean price action, you know, as even euro for that matter, which again, you know, failed at the 618 retrace. We did fail, I guess, last week at a pretty decent level in terms of, you know, former highs up here. But yeah, I won't trade cable nearly as much as euro unless it's just exceptionally clean. Okay, let's go to dollar Swedish krona. I always like to look at the Swedish krona when I'm doing a general analysis on the dollar. And I've got my trading space, JK, sent you 100 coins. Thank you very much. Been following you since your DailyFX days. Cheers. Well, that is a long time. Thank you, JK. All right, so this is a daily chart. Again, keeping this super simple. Long term, there was the high, okay, from 2010. And you can see that it's been a pretty influential level, right? So where was the low in January? Same place. Draw a line off the two lows from January and February. And guess where we reversed yesterday, right? And today we've had a huge follow through. So in keeping with the possible basing scenario for the dollar, broadly speaking, this, you know, dollar sec has that look, if you will. Also, we're going to look at a really long-term channel. Okay, so here's a super long-term channel. 2008, 2011 lows and dollar sec, right? Draw that channel. And again, this is important. This is a good example as well of log scale and arithmetic scale. This is log scale. If I did arithmetic scale, it would look like this. Again, not a huge difference as, say, opposed to looking at a long-term chart of Apple, but you know, log scale is far more precise. You can see that the upper channel line nailed the high last March, over a year ago at this point, and the center line of that channel has been support at times here in 2016. You know, not as precise back in 2017, 2018, but guess where we've been trading off of in 2021? You guessed it, that same level. So you've got a very long-term level there as well in dollar sec, which again just kind of gives me the warm and fuzzies when it comes to being a dollar bull down here. Okay, dollar Swiss. I think we looked at this chart the last couple of webinars, and you can see that this beautiful channel, so simple, right? Line off the lows, extended off the highs, reversed off of that back at the end of March, early April, and came into, this was actually one of the charts in my post several days ago. We talked about sitting at support in dollar Swiss, so thinking that we're gonna, you know, bounce higher off of that, and indeed we have. It's the 200-day average. You can see here November resistance in February, perfect channel, and boom, there we go. So you're looking at dollar Swiss, you might be looking at a retrace up towards 618 up here at 93.20. Former lows here, more or less in line with the 38.2. So, you know, the near term, let's call it 92 and 93.25 or so, right? So again, I'm not, you know, I'm not sure. I don't have much of an opinion on whether or not, you know, we, decline. We've started a new leg down in dollar Swiss. I'm not sure, or a new leg down in the dollar, or a new leg up in the dollar. I don't know, but we've reversed off of well-defined levels here in euro, in dollar Swiss, in dollar SEK. So, for the time being, I'm favoring dollar strength following today's reversal. I've been kind of, thinking that way for really several weeks at this point, and finally we were getting that price action to confirm that sentiment today. Okay, dollar yen. All right, so dollar yen. First off, and again, sorry for the mess over here. Don't worry about it. Just pay attention to the channel at this point. Channel from 2018, right? 2018, 2020 had that false break, which we did talk about several weeks ago. And we went through, reversed sharply. It was a bear because of that until we nailed the low down here actually at that 107.50 level. Which, if I just go to an hourly chart, or let's go to a 4-hour chart, was nothing more than a trend line, right? So here we go. Now, yesterday, we actually had a long here in dollar yen, and we got out yesterday because I was thinking that, I'm having problems with my mouse. I was thinking that we finished 5 up here. We were going to pull back a bit and then maybe try for another leg. Did not happen that way, but that's all right. So as of now, I would look at, say, 109.60 to 109.70 in dollar yen for potential resistance. And you can see why. That's the old channel. So take your line here. This is another important distinction, by the way, between arithmetic and log scale. So if you're looking at log scale and you're drawing trend lines, you just copy the line. Again, on short-term charts, it's not going to matter too much. Just drop my notebook. But on longer-term charts, it will. You need to pay attention to the angle. So you need the right angle. Otherwise, your line is going to be off and all wonky. All right. So you can copy it or extend it from one high or low, but then make sure it's the right angle. So in this case, you can see this is 22 degrees, and this is actually 21 degrees, so I need this to be 22 degrees. All right. Again, I'm addressing this because it was asked on my TradingView stream. So if you ever have questions that you want me to address on during Friday webinars, go to TradingView, go to my stream. It's just my name, Jamie Saettele, and you can ask questions, and I will be ready to answer them. All right. So 109.60, 109.70 is where we are looking for maybe some sort of a pivot potentially in dollar yen, and notably yen crosses, which again I will get to later in this webinar. But that is, you can see this line here, right? 618 retrace, and simply the high here from April. I guess that was at the 13th. And yes, that's what we're looking at there. All right, so you can see this beautiful channel, right? Extended off the high, resistance, resistance, and then even look at the action here. This tells you how important this action is, right? Look at this, resistance, pulls back, support, takes off. Look what happened over here. Holds here, breaks, then becomes resistance, right? Just with these simple channel lines, you can get very precise entries for, short-term trades. Okay, so naturally, let's look towards that level again and see if we can get another pivot off of this and potentially a short, although you might want to look at something like euro yen rather than dollar yen at this point. Okay, and again, it's always nice when it lines up with a fib as it does here. Okay, so that is dollar yen. And this is a good time for me to remind you, I'm working with Scandinavian Capital Markets in Stockholm. also SB Trade Desk, of course. But we are looking for profitable money managers to join our ranks. We have clients all over the world that are looking for more strategies to invest in. So if you're a profitable trader and you would like to venture into the money manager world, we can fund your strategies with up to $2 million. So come show us your skills. Go to scandinavianmarkets.com/fundmytrades. Repeating, scandinavianmarkets.com/fundmytrades. We have a great question here from Kiplimo. Kiplimo, what's going on? I see you on Twitter all the time. How are you? Asking, how do you know that the trend has changed using median line analysis? Well, that is a great question. And I would say, one, this is going to depend on time horizon because there are always various trends competing with each other, right? At multiple degrees of trend. So like, for example, let's take a look at, this is a Euro chart, right? So if I were to look at, like, let's just use this example, okay? This is a decent example. So here's a Euro dollar chart, okay? We have this trend here. That's probably not the greatest example, actually. Hold on, let me find a better example. All right, let's go to US dollar. I'm trying to think of an example that would be actionable at this point. Actually, this is a decent example. So, all right, Kiplimo asking again, how do you know that the trend has changed using median line analysis? All right, well, as is the case in markets and trading, there's probably not one right answer, probably a little more nuanced, but look at the structure in US dollar, right? This is a pitchfork. You're referring to the median line here. And this is clearly a downtrend. This is a bearish structure. It is pointing to the lower right. So again, that's down. So the trend here is down. However, we are right now, this is actually a good example. We are testing the median line as we speak. Okay, if we look at action around this median line, all right, we came here, it was support, we bounced. Okay, broke down, tagged at resistance, we tanked. Resistance, we pulled back. Okay, how do you know if the trends change? One, you don't know for sure anything ever. That's kind of important to keep in mind. However, think about it this way: just know the trend is down, right, on this time frame. So why don't you try to just sell at resistance, right? During a downtrend, try to sell at resistance or sell breakdowns. During an uptrend, try to buy a support or buy breakouts. Okay. In fact, you could say that for this. Remember the dollar SEK chart that we looked at? This is that really long-term chart. Here's the channel. So in this case, and again, this is a very, very long-term chart, right? But the logic applies. This is an uptrend, right? The structure, in this case, a channel, is pointing to the upper right. The center line, aka the median line right here, has acted as support numerous times, notably 2016, 17, 18, and January and February, and we pulled back close to it here yesterday. So again, with that simple logic, this is an uptrend. Let's look to buy support. Indeed, that's what we're doing. So even though this is a very long-term chart, and the trend from here has been down sharply for like 10 months, what we're doing is we're trying to buy support in this uptrend, which happens to be long-term. Okay, so another, to kind of expand on that, if the market were to break down, right, below the center line, might be a little extreme. If it were to break down and then bounce and then find resistance up here, right, just as it found support prior, that would give us evidence or reason to believe that the path of least resistance is lower. So I hope that answers or helps a bit. But it's not necessarily knowing that the trend has changed. Rather, look at what the trend is and, trade that manner on that chart until you have reason to believe that evidence points the other way. Okay. All right. Where were we? Aussie dollar. Commodity currencies here. Look, action since January, right? Is this some sort of a, broad topping pattern? Notably a complex, potentially complex head and shoulders, right shoulder, maybe. Frankly, I have some conflicting evidence here. I'm not real sure. As we Aussie dollar 4-hour chart here, look, pay attention to say 76.80 or so, which is like in 30 pips, okay? Because that level here is going to be your little trend line. You can see it looks like this red line is like, pointing off of this high in the middle of nowhere. I had that because we were looking for maybe resistance up here on that channel. And the Kiwi example that you'll see utilized that technique, and it worked very well. In fact, we put out a short on Kiwi yesterday because of it. But needless to say, pay attention to 76.80 or so early next week in Aussie dollar. Other than that, I don't have much to offer on Aussie. All right, here's that Kiwi chart. And again, you can see here, hourly chart, you can see the channel method that was used, right? Draw your channel, extend from the high. The fact that that center line held as support several times kind of gave me confidence that we were looking at the right structure. And indeed, we nailed resistance there. That would have been Wednesday? I think it was Wednesday evening where I am. And yeah, so we hit that, pulled back. We got a short yesterday right here at 72.52. And now we are heading lower on Friday. So, target here is just this line, call it 71.25 or something. If you got, again, this is very short term, but we are looking at hourly charts, so know your time frame. And we are looking at 72 as resistance, and again, targeting, say, 71 and change on that hourly Kiwi chart. In terms of bigger picture on Kiwi, again, like Aussie, I'm not so sure. Topping pattern or not, I don't know. I would like to see bigger picture. If I go to a daily chart, the big level here is, and I've been thinking this for a while, but it's down here. Really 68 to, let's call it 67.50, 68.50, right? You've got resistance here, resistance, former resistance, so look for it to provide support if we get there. And what I consider something of a neckline, which is the high off of that late 2019 and September last year highs, okay? So that is that. All right, dollar CAD. Dollar CAD is into an absolutely gigantic level, okay? Let's go to a weekly chart. All right, weekly chart. Look at the channel here from the 2011 low, right? You can draw this channel again. It's got to be log scale, because if it's not, it will look like that. Log scale, extend the high, right, off that October 2011 high, and you're going to get a center line. And see where the circle is, that center line? That's where we hit this week, okay? Moving forward, this line up here would be a level that if we did get a sizable rally in dollar CAD, that's where you would look for resistance. But that is, it also would intersect beautifully, by the way, with this 25 line in this pitchfork. But that's getting a bit ahead of ourselves. Just know that dollar CAD is into absolutely gigantic proposed support, I would say, right? We're into a huge level for possible support where we could get an attempt at some sort of a rally, right? Dollar CAD's been exceptionally weak. Canadian dollar's been far stronger than CAD and Kiwi of late. You can see that today, CAD's flat, Aussie and Kiwi are getting smoked. Daily chart, let's go to that. You can see here, maybe we need a little bit more weakness. You can see the pitchfork here from the 2016 high has not quite been reached, right? At this point, I'm being maybe a little too fine, but you can see that it is slightly lower. And also that 122.47 is that low, and that's from January 2018. So we have huge levels here to pay attention to in dollar CAD, okay? So I'm on reversal alert, call it, in dollar CAD as we head into next week. Question here from SRSH99. Is it right to analyze cryptocurrencies under 4 hour? I don't see why not. Yeah, there's no reason why a 4 hour chart would not work, I don't think, for anything really, especially something that trades 24 hours. It's a good time frame. It's one of my go-tos, if you will, for my style. Okay, let's go to Yen FX, and then we'll take a look at some commodities real quick. All right, so Euro Yen, I actually shorted some Euro Yen yesterday because of this. All right, this is a weekly chart. Look at that, 2008, 2014, 2012, 2016, and lo and behold, they converged like yesterday. And look what's happened. So this is one of the better examples, I guess, I could give of kind of how I trade. And by the way, like, you could use my charts and have my charts, but you might trade completely different than I do. So, I'm looking for these big confluences to put on a position, right? Where I think risk is the smallest because the level is the strongest, right? So you can put on that position up here, and now you're home free with your stop because you traded at the level, right, at the pivot with a tight stop, rather than trading a breakdown or a breakout, in which case subject to a false move, and then therefore bigger risk. So I'm not saying that's right or wrong. I'm just saying that's how I do it. Now look, I put this chart in my update yesterday, and I said, the big signal would be a break of this red line here, right? Well, that's in a while. That's like in 150 pips or so. So, if we wanted to look at, say, a shorter term chart, we'd be getting like a 5 waves down. It looks like we are actually. In fact, it's like textbook. So, one of the tricks I do, hourly closes, 1, 2, 3, 4, 5. Get a little bounce early next week, look to sell, say 130, 175 or so. All right, that simple. So I love this Euro Yen chart. I mean, it's just a beauty, this long-term chart here. So that's my favorite setup, maybe heading into next week. I'm not, sure what's, lines up fundamentally with that or not. Frankly, I don't care. But I love this setup here. Huge level. Again, getting that little 5 down on a short-term chart. Look to sell a small bounce, and then target that. I'll go to the daily. Target that trend line here first, and then see what happens if we can break down a bit. So you can see it lines up well with those former resistance there. as well. All right. Persian Leld asks, is it possible to introduce a good indicator for analyzing the digital currency? Or if you have an opinion about Theron's future, please. So I have no idea what Theron is. As far as a good indicator for analyzing a digital currency, look, the same methods that I'm using, I don't think actually, except for maybe a moving average or two, that since we've been looking at all these charts that have actually used any indicators. We're simply looking at price patterns and support resistance levels, whether it's based on, you know, the market itself, or it's based on Fibonacci, or it's based on highs and lows, trend lines, what have you, right? That's the best indicator there is, in my opinion. So with that said, let's look at this Theron, which I don't see coming up. So I don't have that on here. I've never actually heard of that one, but I am not your cryptocurrency guru. I'm more than happy to look at anything, including any cryptos. So if you have a symbol, let me know and I'll take a look at it. All right, let's go to some commodities. So I think one of the most important charts, and it has been for a while, is copper. And here's a weekly chart for you. Look at this copper chart. So we've been looking at this for a while. Obviously, the underside of this massive trend line, right, goes all the way back to 2001. We've tagged that again. We tagged it back in late February. Once it would not coincidentally is when we had, you know, the most recent turn in the dollar, especially commodity currencies, of course. And we just tagged it again. We also tagged the high right here from August of 2011. So again, this is the weekly. Look at the daily and candles, and look at the last couple days. Look at these two candles. This is a bearish look up here. All right, it's kind of the only way to put it. I forget, my CMT tests were taken a long time ago, but I forget the name for this as far as a candle pattern, but it looks to me like it's bearish. You've got long wicks into massive levels. You know, day's not over, but, you know, is getting close. So closing towards the bottom of the day, the last 2 days, selling pressure, yada, yada, yada. Huge resistance. To me, it looks toppy. Obviously, the like euro yen and the trend line there, the huge level to pay attention to is going to be this trend line, and a break below that is needed before we can, you know, really suggest that something, you know, serious is in the works. But maybe pay attention to that 419 level or something as we trade into early May. Okay, copper, absolutely huge. Okay. Huge level. So look at things like Aussie yen maybe. Let's look at crude oil. This is one we looked at last couple of weeks as well. You can see 1, 2, 3, 4, 5. Since then, very sloppy in terms of its price action, overlapping advances. Nice little simple line there. Yeah, Persian Leld had asked a question about a good indicator for cryptocurrency. You can see here, I'm looking at crude oil, and we have no indicators. I just drew a line off these highs, and that was the best indicator there was, right? In fact, here is another example of what we call daily reversal resistance, right? What's that? That's the high day. Put a line on the close, which is right there, and lo and behold, that, my friends, was perfect resistance. In fact, I think we closed at it to the penny yesterday. That is daily reversal resistance in action. So look at it in this way. Got something of maybe a wedge here, right? Following a 5-wave decline. Let's see if we can get a drop. If I look at this, it's pretty obvious where the key level is. Key level is going to be here, and that's going to be about 62.30. So pay attention to that level as we head into next week, okay? We'll throw that red, below bearish, above neutral trading range. Okay. SRS H99 asks to analyze B.N.B. USDT. Okie dokie. B.N.B. USDT, which is Binance Coin. Okay, let's see here. All right, this is a daily chart. Let's see if we first have a channel. So, okay, if I look at life of Binance Trust Tether US chart, which I guess it would be a spread in the crypto world, I would be setting a target or at least an alert up at say 9:20 or so, 9:15, because that is the upper channel line for that for this chart. So I would look at that. As far as Dodge, DODG, not getting anything there, unfortunately. Okay, let's take a look at gold real quick. If some more questions come in the queue, I will address. All right, so we actually had a good question on gold and about. I want to go to a flat, like a new chart on this so I can do it with you guys. All right, so one, we had a question about pitchforks and gold. Well, this is a good one. Gold is a good one for this because, you know, it's exceptionally long term. So I'm going to go all the way back. We're going to look at, this is a basically life of gold chart since the end of Bretton Woods, so back to the 70s. So first thing we're going to do, I'm going to draw this huge channel back here, okay? This is gold, and again, this is arithmetic. Or sorry, this is log scale. If it were arithmetic, it would be this. Which, by the way, is not to say that you can't use arithmetic. Like, for example, this is a perfect example of a slingshot trade where the market breaks out above the channel, right? Right here, boom, pulls back, takes off, right? And then that former channel line provides support as it did in 2015. But we're going to look at a log scale chart, and first thing you'll notice, see the center line of this channel? Look how important that line is. In fact, it's been exceptionally important for the last 3 or so years. Resistance, breakout, pullback, support, pullback, support. That was actually March 2020. So one, you're going to want to know where that is because that could be support again. But now let's move in a little shorter term. And let's go to, we'll look at a 4-hour chart. We're going to look at action since, actually we can look at a daily chart. We're going to look at action since the high from last August. Okay. We're going to draw a channel. There you go. That's just a channel, a simple channel. All you need, no indicator. And this is why we turned bullish gold back here in March, because we were at the lower channel. We were also at a pretty well-defined horizontal level, right? Just look to the left of the chart, and you can see all this. So, you know, as I speak right now, gold is at a pretty important level. That would be the center line of the channel from the high back in August of last year, right? You can see this center line has been influential as resistance, break above as support, as support. So you don't, frankly, you don't want to see gold. If you're a gold bull, you don't want to see gold too far below here. And now if I do kind of like a little intermarket thinking, which tends to get me in trouble sometimes, I will tell you this is another reason why I, am kind of keen, if you will, on yen crosses to the downside a little bit. If you think of gold holding support here as it is, higher gold, historically means higher yen, or I shouldn't say means, but correlates with higher yen. And in that case is lower yen crosses, right? If we look at something like copper gold ratio, which copper is at huge resistance and gold looks near-term constructive. If that ratio starts to come off, again, lower yen crosses, lower yields, so higher TLT. And this is why I get in trouble when I start doing intramarket thoughts, right? Just look at the chart and trade the chart. Trade support and resistance, et cetera, et cetera. So yeah, so someone had asked about pitchfork analysis on gold, and here you go, right? We have a very, very long-term structure, and we have a shorter-term structure that goes back to August, and that's it. So I hope that helps. All right, let's take a quick look at indices, see where we're at, and that'll probably be about it. All right, so this is the chart that I know we've been looking at during these webinars, and that is kind of the expanding diagonal that goes back to like last November or so, right? So it's still, if you will, kind of meandering up towards the upper barrier of this. I don't see how you can be bullish up here, frankly. And again, I'm not like a stock picker. I'm not a investor in equities in that way. But from a trading standpoint, at least trading this index up here, to me this is resistance, and I'd be looking for us to come off. So that is that. The Nikkei is also a very interesting chart. And here, check this out. Let's look at the Nikkei in this fashion. Let's go to like a really long-term chart here. All right. Let's go to a monthly chart. Okay, so Nikkei chart. I think it's that. Yeah, so, okay, trend line here, right? And then trend line here. Kind of some overshoots, but you get the idea. Weekly chart here. And I believe we had, yeah, here we go. Okay, so you can see kind of this topping formation, if you will. You could even call it, say, a descending triangle. Where's that little paintbrush? So, descending triangle, something like this, right? And if we were to break down beneath, excuse me, what is that, about 28,300, you would have, a breakdown. Now, here's the thing. So on Nikkei, there is a channel that you're going to want to pay attention to. It's not a channel, it's a shift fork, and I think it is, yeah, it's this one. So this is a regular channel here, okay? We're going to draw the shift fork, and we have the same structure actually on British pound, adhering to a shift fork as well. But you can see the upper parallel was resistance. Quite clearly, the center line or median line has been key, right? Ever since November, really, riding along at a support, right? Even all the way up to March. So this, you're always going to have risks of false breaks, but this is where I would be careful. We break below this. you're going to want to pay attention to this lower parallel is all I'm getting at. And that's going to be about, if we get there, let's just say if we get there like next Friday, all right, total guess, I don't know what's going to happen. We'd be around 28,000. And, if we keep going below it, okay, fine. And then, we're going lower. But if we don't, and if you get some sort of, a bullish candle reversal down here, then that's when you have to be careful about a false break on the downside. So while I do like the Nikkei lower up here due to the very long-term trend line confluence and kind of the, descending triangle action we've got here since February, you have to be aware of possible failed breaks, if you will. So that's all with that. All right, so I do want to remind you all that at Scandinavian Capital Markets, we are looking for money managers, okay? We've got clients all over the globe that are looking for strategies to invest in. So if you are a profitable trader and if you would like to venture into that world of managing money, then come see us. We can fund your strategies with up to $2 million. Come and show us your skills. Go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. All right. So I am going to wrap it up here unless we get any more late questions coming in. And if we don't, enjoy your weekend. Okay, it looks like we do not have any more questions. So again, if you would like to, throughout the week, post questions, you can do that as well. If you go to my TradingView account, you can post questions there. So it's just my name. Again, that's Jamie Saettele, JamieSaettele. And hold on here. Or sorry, J Saettele, my first initial and then last name. And you can ask me questions throughout the week so that I will have them ready for you on these Friday webinars. All right. So again, that's it. Have a safe, happy weekend and see you next week. All right. Jamie Saettele here, signing off. Bye.